Very good morning, everyone. I hope you all have been preparing really hard for your exams. So let's take up the income tax amendments that are applicable for May 2023. Let's start straight away with the rates of taxes. As far as the rates of taxations are concerned, there has not been any changes here. For an individual, it is still 2,50,000. If they are below 60 years, 2,50,000. Up till then, it is nil. 2,50,000 to 5 lakhs, 5%, 5 to 10 lakh, 20%, and above 10 lakh, 30%. If they are 60 to 80 years of age, it becomes 3 lakhs. And if they are above 80, it becomes 5 lakhs. Please remember, this is only applicable in the case of a resident. HUF also, there is no taxation change. Firm is still at 30%. Cooperative also, there is no changes. For the companies, please note that the previous year will now be 2020-21 in the case of 25% taxation. So if the turnover or gross receipts is less than 400 crores for previous year 2021, it shall be 25%. Apart from that, there is no other changes here. As far as surcharge is concerned, there is no change in terms of tax rate. It is still the same. But earlier, we used to have maximum surcharge that can be charged used to be 15% in respect of income coming from share market. So we used to call it as dividend income, short-term capital gain under section 111A on equity shares and others, and long-term capital gain under section 112A. So this used to be the basic surcharge limit. The maximum could be only 15%. To this list, now other long-term capital gains have also been added, which means the maximum surcharge, irrespective of the income, it cannot exceed 15%. So even if the income happens to be more than 5 crores, normal surcharge rate is 37%. But if it includes dividend and capital gains of this nature, so here we have an add-on of 112 also, the regular capital gains, then the surcharge limit cannot exceed 15%. So this has been one addition here. In the case of AOP, now there is a small change even here. In the case of AOP, if the members are other than companies, if the members happen to be other than companies, then similar rate of surcharge as that of an individual shall apply, regular rate. Okay, regular rate as that of an individual. But if the members are only company, in that case, the surcharge rate shall be as follows. If it is exceeding 50 lakhs but less than 1 crore, 10%, and if it is more than 1 crore, 15%. Cooperative societies, also there is a small change with respect to surcharge. If the total income exceeds 50 lakhs but less than 10 crores, 7%, and if the total income is in excess of 10 crores, it is 12%. That's with regard to your surcharge rate. Apart from this, there is no other change in surcharges. Let's get started with the other amendments also. The next amendment which we have is in term of section 68, cash credit. So we had a section where in case there is an amount credited in the books. Okay, so we have an entry of a credit. So income has been received in the books and the assessee is not able to explain the source to the satisfactory explanation, is not being given to the assessing officer. Whatever is the amount credited, that can be taken as deemed income. So this is the existing section. Now, what is the amendment that has come here? Amendment is, let's say in the books of A, there is a cash credit of 10 lakhs. And he says, this money is given to me as the loan by Mr. B. Now, the IT department or the assessing officer will go to Mr. B and ask for explanation of source. How did he get this 10 lakhs to give loan? So if B is not able to offer satisfactory explanation, even then it shall be deemed as income in the hands of A. So this is the add-on. And once it is in the nature of cash credit, it will also be undisclosed income, and the same taxation treatment of 60% plus surcharge plus education cess shall apply. Next, what we have is in terms of salary, a very small amendment has come here. This is in respect of perquisite offered towards medical facility. So the existing provision is, in case the employer is owning the hospital and any treatment is taken there by the employee or the family members, it shall not be a taxable perquisite. Then we have, if it is in a government hospital or prescribed diseases in a private limited hospital, all of those things. But now, in respect of COVID-19, there has been a add-on. So, if a person is getting any treatment with respect to any illness relating to COVID-19, that shall also not be taxable as perquisite. So, if the employer is giving any reimbursement or any kind of amount towards medical illness or medical treatment of an illness relating to COVID-19, it shall not be a taxable perquisite. But COVID-19 positive report of the employee or the family member needs to be submitted along with all the necessary medical documents where it is mentioned that the person is getting treatment with illness relating to COVID-19, and that too within 6 months from the date of the person being COVID positive. And also a certification where all the expenditure incurred for the treatment is being issued. So if this is done and any amount is received towards the treatment, it will not be a taxable perquisite. Next we have is income from house property. There is no other amendment here. Let's move on to PGBP. In PGBP, we have a section 37, which talks about general deduction. And it says that expenses should be legal. This is already existing there. The only thing which is added now is they have explained what do you mean by legal expenses. So they say that if anything is an offense or if anything is prohibited under any law, it shall be illegal. Also, if any other benefit is provided which is in violation of any law, so the Indian Medical Association has prohibited any kind of freebies to be given to the doctor by the pharmaceutical companies. Now, in case that is being done, then it is in a violation of any law. So any benefit or perquisite which is offered to the doctors, in this case by the pharma companies, would be in violation of law, and such deductions will not be given. To compound an offense under any law in India, it is nothing but a penalty. So if there is any kind of penalty levied under any law in India, it could be a person, the employee or the staff has gone somewhere without wearing a helmet and he was caught by the cops, and any penalty that he's paid there will not be a lovable deduction. Next, we have is 43B. Here, deduction to be made only on actual payment. So this is the list which we have is normally all your taxes should be paid before the due date of filing of return. All your PF should be paid, all of that. In that list, we have an addition that is with regard to interest payable on loan. So if there is an interest payable on loan and that is converted to debenture, let's say, for example, there is an outstanding interest of 10 lakhs. Loan is 1 crore, outstanding interest is 10 lakhs. If this interest which is outstanding, if this gets converted to convertible sorry, if this gets converted to debentures, it does not amount to payment, which means it cannot be, or rather shall not be treated as actual payment. This is the amendment here. For capital gains, the only thing we will have to remember is the cost inflation index is 331 for the previous year, 22-23. In other sources, we have a couple of amendments. First one is with regard to property definition. It says it will now include virtual digital assets. Something like your cryptocurrencies are what are predominantly targeted here. So they will also be forming part of property. Next is with regard to 56.210. So this is for gift. If you all remember the gift provision, any amount received in excess of 50,000 from a non-relative shall be chargeable to tax, but an exception has been given again with COVID-19. So this will not be applicable, or rather, this case is going to be an exempt case. So any individual who has got any sum from a person for medical treatment. Okay, so again, with regard to COVID illness, if a person is getting any money for medical treatment of himself or a family member, then it shall not be treated as a taxable gift, subject to conditions issued by the central government in this regard. So this is first thing for medical treatment. Second, in case a person happens to die because of COVID, in the case of death of a person due to COVID illness, then if family members of such deceased person, if they receive amount from the employer without any limit, so if the employee of an organization had died because of COVID and the employer is giving to the family members any sum, it shall not be a taxable gift. Or if any other person is giving it and the amount does not exceed 10 lakhs, it shall not be treated as a taxable gift, but it should be relating to illness or because of COVID only. And the payment without any other limit or 10 lakhs should be received within 12 months from the date of death of such person. And of course, there are other conditions which shall be applicable also. Please remember, family here means spouse, children, dependent parents, brothers, and sisters. The conditions that has been given is that the individual should have died within 6 months from testing positive due to COVID. And the family member shall keep a record of all the documents, medical reports, where it is clinically determined that the person was COVID positive and other investigations were being done. So this should all be there by the doctor. All the treatments which is done by the doctor should be clearly maintained by the family member. Also, the medical report or the death certificate should specify that the death is because of coronavirus or COVID-19. Whatever money is received, the family member shall also fill it and get it verified in Form A. So this is one amendment which has come because of COVID-19. Next is with regard to deductions under Chapter 6A, ATCCD2. So this was, if you all remember, the employer contribution to any pension fund which is referred to under ATCCD2 shall first get taxed under salary. 17.1 meaning of salary takes into account this, and later on a deduction shall be given under ATCCD2. So deduction is allowed to the extent of 10 or 14%. 10% is for others and 14% was for central government employees. Now, this is also extended to state government employees. This is a small amendment here. The next one is with regard to ATCDD. So in this case, now, okay, earlier we have a section ATDD where, let's say there is a dependent person who is having any kind of a handicapped relative. Let's say A. A is having a brother B who is handicapped. And for the benefit of B, A has decided to put up the amount in LIC annuity scheme for B. So if something happens to A, with this particular money, B will be able to survive. And deduction is given based on the amount which is deposited and so on. But if it so happens that B dies before A and this annuity amount is not used, then whatever is the deduction that is offered under ATDD shall be reversed. Because now he'll be eligible to get the annuity for himself itself. Or if the annuity is received before assessee, that is before A turns 60 years of age, in this case also, it shall be reversed. So that is with regard to ATDD. Next one is in terms of taxes and fees. Here we have a section 234H, which is fees for linking PAN with Aadhaar. So if it is linked between 1/4/2022 till 30/6/2022, it shall be 500 rupees. And if it is after 1/7/22, it will be 1,000 rupees. If it is not linked till 31st March 22, it will become inoperative, but there will be no negative consequences. But after 31/3/2023, negative consequences and penalties shall also be applicable. So from 1/4/2023, if anyone is still not linked their PAN with Aadhaar, negative consequences starts prevailing. That's why we see so many notifications going on with the department also now to link up as soon as possible because the date is nearing. In terms of filing of return, we already have an existing list as to who are supposed to file their returns. Now, these are the additions to the existing list. If any person has turnover exceeding 60 lakhs in business or gross receipts exceeding 10 lakhs in profession, they will have to file their return. If TDS deduction or TCS happens to exceed 25,000, or so if they're having a deduction done to the extent of 25,000, or a senior citizen is having deduction done up to 50,000 or more, then also he will have to file their return. And then if suppose deposit is in savings bank account, maybe one or many savings account, which is of 50 lakhs or more during the previous year, even then they are supposed to file their returns. So let's say here, let me give you an example. X is having A, B, C. So all of them have deducted for X TDS. Let's say A has deducted 10,000, B has deducted 15,000, and C has deducted 5,000. This totals up to 30,000. So here, if he is less than 60, he will have to file his return because the TDS or TCS totals exceed 25,000. Next one is requirement of application for PAN, which means after 15 days from 10/5/2022, this will be coming into effect. And this is that they have to apply for PAN. When should they apply? At least 7 days before they are intending to take part in a transaction. What is a transaction? If a person intends to deposit cash could be in his bank account, cooperative bank account, or post office, and the aggregate during the entire year of such deposit is 20 lakhs or more, then before at least 7 days, he should make a PAN application. When, suppose till, let's say till December, he has already deposited 19 lakhs. And in January, he intends to deposit further 2 lakhs. So now he knows this limit of 20 lakhs is going to be crossed. So before 7 days, before making such deposit, he will have to apply for PAN. Similarly, if they are withdrawing cash and if the total withdrawal is 20 lakhs or more, or if they want to open a current account or a cash credit account, they will have to apply for a PAN. This is with regard to PAN applications. Next, we have a very important amendment which has come with regard to updated return. So we have regular filing, we have belated returns, we have regular returns, we have revised returns. What is this belated return? Normally, from the start of the assessment year, that is 1/4/2023, the assessment year will start for previous year 22-23. Normally, from the start of the assessment year till 31st July, or depending on the audit case, 30th September, there is a time to file the returns. In case return is not filed by then, we get additional time, that is 3 months before the end of the assessment year, till 31st December, we get a time to file the return. What are they talking about? They say if a person is forgotten to file or for any reasons they were not able to file their return by 31st December, then they will be given additional time of how many years? 24 months from the end of the relevant assessment year. So now this year will get over at 31/3/23. Sorry, 24. From then, further 2 years is also given to file the return, which means additional time is given. And even if he is filed a return, even if he is not filed a return, he shall still be able to file it. But this comes up with a lot of conditions which we need to understand. Let's say, for example, X is filed a return which had a loss. Original return had a loss. And now he wants to file an updated return and declare income. Can he do so? Yes, he can. But let's say X is declared or X is filed a return of income, and he wants to now file an updated return declaring loss. Can he do so? No, he will not be allowed to do so. So basically, only if you want to offer more income, additional income, or reduce your refund, or show income instead of loss, you can use it, not otherwise. In such cases where a loss return is converted into income returns, even later years where the set off of loss is being done needs to be changed. Now, please see here where and all this will not be applicable. Loss return, I told you earlier, we cannot file a loss return. It should only be an income return. And tax liability should only increase in the updated return. It cannot decrease. The refund amount can be reduced. It cannot be increased. So in these cases, we cannot file an updated return. If an updated return is already filed, you can only file once. You can't keep revising it. If any proceeding is pending, if any notice has been issued, any proceeding is being pending, or if CBDT has notified a particular clause to not file such returns, this shall be applicable. But can a person immediately file without any consequences? No. there is going to be a consequence. And what is the consequence? Additional tax shall be payable on the total tax liability, including interest. So we have your tax, surcharge, education cess, interest. This is called as the total tax liability. On this, 25% shall be additionally payable. Okay, if it is filed within 1 year from the end of the relevant assessment year, and 50% if it is filed within 2 years. So I said you previous year 22-23 has assessment year 23-24. From here, we take up 2 years. That is, from 1/4/2024 onwards, we start. So from 1/4/2024 onwards, we will start calculating 2 years. Within 1 year, 31/3/2025, if they are filing their updated return, 25% additional income tax. If they are filing in this area till 31/3/2026, then 50% shall be the additional income tax payable. However, if there is any TDS, TCS which is not considered, the same shall be considered. So this is a very important amendment, and for sure we can expect some kind of questions in this area. Students, please be careful about this one. Next, we have a new addition to our TDS, which is 194R. This is for any benefit, whether convertible or not, or any kind of perquisite coming to the business or profession. Let me give you an example. Sometimes, let's say A has a dealership of X Limited. So X Limited is having its product and A happens to be the dealer. X Limited says, you achieve turnover of 1 crore by selling our products, and we will in turn, so X Limited is saying that you sell our products and achieve a turnover of 1 crore, and we will give you a trip to Goa. Let's say that is the deal that they are giving. This is nothing but a benefit or a perquisite. And if the value exceeds 20,000, tax needs to be deducted by whom? X Limited, the one who is providing such kind of perquisite or benefit. Who is supposed to deduct? Any person, of course, individual and HUF, whose turnover is less than 50 crores, less than 1 crore or 50 lakhs in the case of profession in the immediately preceding previous year will not be included here. And the rate is 10%. This benefit could be offered to any resident. And deduction should happen before such benefit is provided for. This comes into effect from 1/7/2022. Now, here in our example, X Limited will have to make sure before the benefit is provided, tax is being deducted and paid. He can do it either out of his own pocket, or he can collect from A and give it to the government, or he can say, insist A that you make advance tax payments to this extent and give the proof of the same. So these are the ways where X Limited or the payer will have to ensure it is done. CBDT has also issued certain guidelines with regard to the same. Here, X Limited need not bother and see whether it is going to be taxable in the hands of A or not. So even if it is of capital nature, like a car is given or a land is given, even then TDS shall be applicable. But if there is any kind of a sale discount or a cash discount, then TDS will not be applicable. TDS is applicable on free samples. But if there is an offer like buy one, get one free, TDS will not be applicable because there is something which is paid for. There is a consideration. We are talking about benefits where there is no consideration coming in picture. Now, let's say, for example, A gets a car. Okay, so A has already offered the value of car as income, and therefore he can also claim depreciation on the fair market value. That will also be there. There are a few more clarifications given here. In case there is any bank waiver on account of settlement as a one-time settlement, then it shall not be taken as a benefit. And who is giving such waiver? It could be a public financial institution, scheduled bank, cooperative bank, primary cooperative agricultural rural bank, state finance corporation, state industrial investment corporation, non-banking finance company, non-deposit taking non-banking finance company, any other public company which is engaged in providing long-term houses, a long-term housing finance or any other finance, and asset reconstruction companies. So if they are giving such waivers, then TDS shall not be applicable. So the whole concept was, let's say a bank, SBI, they have given a loan to X. Now X is not able to repay the loan. That's why we need a restructure. So if he is not even able to repay the loan, how comes the question that how will he be able to pay even TDS or any such thing on waivers? Therefore, to avoid the difficulty of such institutions, they have come up with this clarification. How do we value the perquisite? If it is a purchased benefit, then the purchase price. Let's say X Limited had to buy the car to give it to A. So we have the purchase price. But if it so happens, X Limited is the manufacturer, then normally to the customer how much they charge, that is the selling price, that shall be taken into account. This had also affected the social media influencers. Even they get certain benefits. So when they advertise a particular product, sometimes they are able to retain the product. So they have got the benefit or the perquisites. If they are retaining it, it shall be a taxable perquisite. But if they are returning it back to the manufacturer or the advertiser or the company, then it shall not be a taxable perquisite. So if they are retaining it, it is a taxable perquisite, and 194R shall be applicable. So these are the amendments. This is be applicable for the May attempt. Wishing you the good luck. Thank you.